So welcome everybody. This is NFKFX and this is Monday, 20th of April. That means I have few days to my free trading class ends. So I just want to make a tutorial video on how the NFK model works. So anybody who wants to learn can easily grasp and understand. Without wasting much time, we'll dive into it. So to learn this, you have to first know the basics of trading, how to trade, what is the trend, what is trend, what is liquidity, because it's a liquidity based concept all the way from the weekly time frame down to the 1 minute time frame. You guys already know. So with that being said, we'll dive right into it. Let's go straight up to the weekly time frame. Starting any analysis on my model, which is the combination of both CROT and ICT, we always start from where the weekly time frame. If you see there's a monthly fair value gap there, I'm even expecting the market to set down to this point too, but see something that make us started buying up since 3 weeks back. If you see this candle, this particular candle, watch the crosshair. I'll be using the crosshair to mark and indicate some places in the chart. So just watch that straight line that looks like cross. It's called the crosshair. So if you see the crosshair, there is a purple candle, and all my purple candles right here state that it closed as a buy candle. As you can see, this is the weekly time frame. What you can identify here on the weekly time frame currently is a break of structure above this eye. This is a swing eye and a break of structure above it with the body close. You can see the candle that broke it with the body close. So that indicates a bullish market. The market runs up, creates a new all-time highs, then dumped down, came back to a opening and close gap on the daily time frame right there. Then it dropped. It dropped down to where? It dropped down to a order block on the weekly time frame inside the break of structure on the weekly time frame. You can see that as ICT. ICT is not hard. ICT don't have to be complicated. It just has to be rule based and it has to be followed correctly. So if you see on the weekly time frame, this is just a bounce from a weekly order block and a sweep of what? A sweep of a weekly inducement and a sweep of a previous week low. Because this candle right here is a weekly range that is being used right now. Is a weekly low. This candle here, the low of the candle is being swept by this day that closed as buy, which means, let me explain it further. This is even a previous month low too. It's a previous month low, also a previous week swing low. It sweep both of those liquidity. That is a very strong and aggressive mood for it to start kicking up back. So what we can identify here is that when this candle closed as buy, it gave us a weekly CROC, meaning for it to sweep, it's called a liquidity sweep. It's called a liquidity sweep. The rejection from this weekly range low, this candle low, when the next week opened, the candle maybe went up, come down, for through the week, went down to this other block, bounced off back, came back up, then it closed as buy, meaning it closed as a buy candle, meaning it closed higher than when it's opened from. That's just the anatomy of buy candles. A candle is made up from only four things: the high, the open, the high, the low, the open, and the close. That's what make up every candle. So every sell candle close lower than where it's open from, and every buy candle close higher than when it's open from. That's the anatomy, the logic for CRT. So if you see, this is not, number one, this is not a theory classic CRT. This is a multiple candle CRT because after the sweep, it has taken 3 weeks and still not reached our main draw on liquidity. Mingoma, it has still not getting to our main draw of liquidity, but we can see there have been some pretty good opportunities since the week when this range low was swept. Since that week, there have been a pretty good buying opportunity on gold. A lot of people could have get this opportunity. So all you want to identify as the NFK trader is a weekly time frame CRT sweep at first, you want to identify a weekly time frame CROT sweep that reacted from a ITC PD array too. You understand? Once you get a weekly CRT sweep combined with a ICT PD array, you are good to start looking for opportunities. Ever since that week, ever since this week, this was I think that was March, I think. Ever since March 26, you can see the date there on the crosshair. You can see the date moving. Ever since this weekly candle closed like this, it closed as buy on that weekly low. It has been chasing the weekly high, as you can see right there. Previous week low, and previous week low and previous week high. That's the two liquidity I've been reacting from over the week. So with that being said, you have spotted the weekly time frame. What you just have to look for, that's that. You just have to look for a weekly order block or a weekly fair value gap reaction from a liquidity point of the weekly. With that being said, you can see we just dived into the daily. We only combine the model, the ICT and CRT, we only combine it on 4 to 5 time frames, which is your weekly time frame, your daily time frame, then your 4-hour time frame. You can use 2 hours to refine it before we jump to the 5 minute time frame. That's all you need. Then on that 5 minute time frame, if you like precision entries, you can enter on the 5 minute time frame inside the 1 minute time frame. Something like that. That's just all I do in my model, and is why I make it, because it's so clean and so precise. So this is the daily time frame. Ever since that week, that this is the week close, that week that closed, can see that's March 26th. That's where the week closed. The last week that swept this weekly low, it closed back inside the range, meaning that what we are rejecting to go lower. For we rejecting to go lower, it tells us that the market is not chasing where this high liquidity, and there you can see there's also a daily order block. There's a daily order block coupled There's a daily order block, a daily fair value gap coupled with a daily breaker block. This is called the daily breaker block because it's a buy order block that's supposed to bounce the market back, but it didn't bounce the market back. Instead, it aggressively broke through it and created a fair value gap right there. That means it's a sign of a breaker block. For you to see that happening, you supposed know that when that weekly time frame rejected and closed inside this weekly range, this is that weekly candle range. This is the weekly candle range. When it closed back inside, you already know the market is going up. All right. So that move up, all we have to find on the daily time frame is another sweep aligning with what the weekly time frame. If the weekly is sweeping lows, all you want to see is the daily also sweeping lows in the weekly discount range. Because as a trader, we can see something I draw in this chart. See, this is what previous week EQ. This is previous week EQ, and this is previous day EQ. There's a range I'm reacting from right now. You can see the market dump down here, tapped into this liquidity, now it's floating back up. But there's a range I'm reacting to normally. There's a range I'll be backtesting, I mean. Not that range, I'll be backtesting a particular range for you to understand what I'm trying to say. On that aggressive move up, you can see that after the close, the next week took what? Three straight buy candles. The next day started with three straight buy candles for you to know that yes, they are right. Three straight buy candles. Where did it ended up and when did it started selling from? A daily fair value gap right there. You already know a fair value gap is a space between a first candle low and a third candle high. That's a sell. And for a buy is the space between the first candle low and the first candle high and the third candle low. That's for a buy. You already know that. After that, you want to see exactly what we just spotted on the weekly time frame. That is what you are looking for down to the daily time frame and down to the 5 minute time frame. That is all you will be looking for, aligning them together. As you scale down to the lower time frame, you align the descent alignment together. You can see this is it on the daily time frame, bounce from a weekly order block and a previous month low. This is a previous month low and a weekly order block bounce. Those two bounce made the price switch back bearish. But we don't know if it's bearish because this move looks like a corrective wave. So let's just see if it will take us back to the main drawn liquidity, which is the previous week high that the low has been rejected. With that, you have seen a very big part, like a very big picture of the market. You always know when you are analyzing from the weekly time frame, you are looking the overall part, like the overall pattern of the market. Everything is correct when looking at the weekly time frame. Nothing can go wrong. That's one thing about trading. When you are using the weekly time frame, when you're analyzing from the weekly time frame, nothing can go wrong. It's hard for it to go wrong. That's just one thing I have noticed about weekly time frame. The analysis from weekly time frame always goes right. Trust me, guys, on that. Trust me. The analysis on weekly time frame always goes right. That's just one truth I'll tell you. It always goes right, man. Because if you see now, let me just give you one good example. You already know from the midpoint of any candle range, from the midpoint of any candle range, the upside are for sellers, then the downside are for buyers. You have to treat every candle that's ranged as you have to treat every candle as a range on the high time frame. That's one thing you need to know about CROT. Please pay attention to this. Pay attention to what I'm saying. Don't watch this video once. Watch it more than once. Watch it more than once and try to practice it cleanly, not complicatedly. Try to make your shots always look clean. Try to make your shots always look clean. I give you that. That will help a lot. So let me show you something about CROT. On the daily time frame, all we have to be looking for is a candle sweep. You know, either a candle sweep or a reaction from where a daily discount, because we already know the weekly is buying. You understand? We already know the weekly has made a weekly rejection from the weekly low. So all we will be focusing on is buys, buy, buy. And so with that being said, this is what happened after that. The next 3 days after that rejection close on the weekly time frame, made the aggressive buy, which caused what? It caused a daily fair value gap. See what happened to that daily fair value gap. If you see this range, let me draw my Fibonacci so you see. If you see that daily candle range, this is what happened. The market buy straight up to the premium part of that weekly range right there. You already see the weekly range. The weekly range, I marked it from the low, I marked the low, I marked the high, then I marked the midpoint. That midpoint is your EQ, mean equilibrium. If you have been in trading for long, you should already know that it's called a equilibrium. The midpoint of any candle or any range. See this fair value gap, there's a midpoint there. That's called the equilibrium. In institutional trading, equilibrium just simply means the upside of that midpoint is for sellers, then the downside of the midpoint is for buyers. So if you use that anatomy to work on your trading, you will always don't rush and you will always get good opportunities. See this opportunity right now. Market came back to this daily fair value gap. I'm just backtesting, so I won't be drawing anything. I have a trade to take today. As you can see, this low has already been sweeping. This daily low has already been sweeping and the market rejected back up. I should have used that opportunity, but I didn't catch the move, so I'll just wait. I need to focus on one trade today, but I need to still backtest for you guys so you get it right. So if you see on this purple candle range, when I mark where I just drew with the Fibonacci, the low to the high, you can see the market came to the weekly premium. You already know the premium are for sellers, right? It came back to the weekly premium and also a daily fair value gap. Then it did what? It sold down. What caused that reaction? Let me show you now. Let me delete this first. Sorry. Let me show you something. This is past price action, so don't be messed up if I just want you to try and understand what I'm trying to do here. Nothing more. If you see, there's a daily fair value gap that has a liquidity sweep. Where's the daily high? Look at the daily high. Previous day high to previous day low. Let me show you guys something real quick so you'll see what I'm trying to explain. I'm looking for the best place I can give you a good example, and I think that's it. That's it. You want to be taking the daily time frame trade in line with the weekly time frame trade, then the 4 hour will just give you your POI. That's all. If you see here, if you see right here, all that I did, I want to show you one sell. This is a clean sell because it's aligned with the weekly, daily, and the 4 hour. Aligning the weekly and the daily and the 4 hour just means, see this price is bouncing for where? Look at the previous week EQ, mean the upside of the 50% of the weekly range I'm reacting from is the seller side, right? On that seller side, the last candle that entered the seller side got the eye swept. After the eye swept in the also the seller side of that daily favorably gap. If you go down to the 4 hour now, that is a weekly reaction that I've used the daily to just confirm for you guys. On that previous day high that was swept, also see that there's a 4 hour high sweep too, Abi. Can you guys see it? There's also a 4 hour high sweep right there. Let me just make it clean for you so you don't make mistakes. See, on that same point, on that same weekly seller point, you can see the daily confirmed it with that daily fair value gap and the previous day high sweep. And now I want to confirm it also with what? I want to confirm it with the 4 hour time frame also. Confirming it with the 4 hour time frame simply means you want to find a confluence that aligns with your strategy on the weekly, daily, and also on the 4 hour. With that, previous day high was swept, also as previous 4 hour high was also swept. That's it right there. Previous 4 hour high was swept, just as the previous day low has also been swept. I mean previous day high, sorry guys, sorry for that. Just as the previous day high has been swept, the 4 hour high was also swept that night. That was midnight open. That was a midnight open. That reaction was cashed and clean. Not most trader was there, so it was just easy and just go pump 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 pump. Aligning to the 2 hour time frame. 2 hour time frame is not really compulsory. It just has to look the 2 hour time frame to get a cleaner entry. When you see it on the 2 hour time frame, you see it's cleaner. This is a previous day high and also a previous 4 hour candle high. Both of them are sweeping from where? They are sweeping from the previous week premium points, which is the previous week sellers points. You understand that, right? Is reacting from previous week sellers point. That's very strong confluence. If you catch that move, all you need to do, catching that move from the daily, catching that daily high sweep and the 4 hour high sweep, all you need to do when you have get the refinement on 2 hour, you just have to jump to where? You just have to then jump to the 5 minute time frame. Jumping to the 5 minute time frame, adding all these confluences down from the weekly. See what happened. I won't lie to you now. This is a 4 hour sweep on the previous day high sweep. I won't lie to you. All you just need from there is the last purple candle getting displaced with the body. As you can see, this candle got displaced with the body. That is called my CROS, which is what? Candle range shift. It's also another anatomy as it's also CROT, but on the low time frame, you understand? It's also a CROT, but on the low time frame, the C is just like 5 minutes CROT high and 5 minutes CROT low. But on the 5 minutes, I don't call it CROT high and low. I call it what? A turtle soup and a displacement, which is a CROS. This right here is just a turtle soup. A turtle soup in trading, you can go search that up. Turtle soup in trading just simply means a fake out move. You understand? Turtle soup is simply a fake out move. Turtle soup is a fake out move. Okay, TS, that's what I need. Turtle soup is a fake out move towards to deceive the intention of, it's a smart money move to deceive the intention of traders going one direction and they just make a fake out, boom, fall back to the right direction. After the CRS, after confirming the turtle soup, you just want to confirm a CRS. Right here, you see a lot of people took trade right here. They all do what? They put their stop loss right there. Let me give you an example. A lot of people didn't wait for this CRS and the pullback to the 5 minute order block. This CRS created the fair value gap. The CRS, which the candle range shift, created the fair value gap, and also it also created an order block. Don't forget that. All you want to confirm with the CROS and the turtle soup, you can see this is a body break. It first broke it with the wick right here. It broke it with a wick with a wick right here, but a wick break, like a wick break, is also a rejection based on your model. You see the market came back, then rejected back and closed as sell, closed lower than where it opened from. That is not a confirmation of a CRS. This is a confirmation of a CRS, because when you see this one, it closed aggressively down. You understand? This one closed very aggressively down with intent. You need a CRS with intent, not just any CRS. You understand? You need a CRS with intent, not just any CRS, bro. You need a CRS with intent. And you know you are doing that in line with what? The weekly time frame. The price is now on the weekly premium points. You can see previous day EQ. This is a premium point of the weekly, sweeping a previous day high and also a 4 hour high. That is a much confluence for sellers. Getting this CRS right there, getting the CRS after those weekly, daily, and 4 hour confirmation, these CRS have shown you that sellers are clearly in control. But right now, when sellers are clearly in control, you don't just jump in unless you have $1,000,000 to risk. We don't have $1,000,000 to risk, so you don't jump in. You wait after that to see the next pullback. After you've confirmed a CRS that created a fair value gap or a order block, but I mostly use order block. After you confirm a CRS and a TS and a CRS, which means a turtle soup and a candle range shift. A candle range shift is simply a momentum shift. If you see here, the market is delivering up, meaning what? It's looking for more 5 minutes confluence to go up. You can see the market is trending up, trending up. It's trending up, trending up, trending up, trending up. When it's trending up, did you see any buy candle being displaced like this on a high time frame key level? No. It was just trending up because the price was on a weekly discount point. It came back to this premium point of the weekly. It fell back. It came back to the premium point of the weekly. Fell back again. You can see how clean the confluence is. It's clean. Just wait for a clean confluence. After the CRS has formed, all you need to do next is the CRS gives you your order block actually, because the CRS shift is always the last candle shift on a delivery move. When the market is delivering up, we know we are buying. Then the market made a CROT shift on the buy candle, making that last buy candle, the body of that last buy candle, or let me just say the last buy candle, is the order block. The last buy candle that got displaced aggressively by sellers is the sell order block. The last sell candle that got displaced aggressively by buyers is a buy order block. That's the logic. But me, I don't take trade from the wicks of order block. I take trades from the body of order blocks. And if you see now, the CRS have gave me my order block entry, which I'll be marking at order block 1. That's OB1. OB1. I'll mark that as OB1. Sorry guys. I'll mark that as OB1. Oh. I'm coming guys, sorry. So this is it. OB1, that's OB1. As you can see right there is OB1. On that 5 minute OB, all you have to do entering the trade is to go down to the 1 minute OB inside that 5 minute OB. So let's confirm that. Going down to the 1 minute time frame on that same trade, let's see What other block is inside that place on the 5 minute time frame? Let's confirm it for you guys. You'll see that there's a 1 minute order block inside that 5 minutes order block. Is a must, bro. Like a must. Do you know what a must means? It's like a must. It must be. Yeah, like it must be. Trading view is misbehaving. Trading view is misbehaving is like they don't want to go further to that point where I just got that thing on the 1 minute. So maybe I should just use, oh sorry. Oh, that point is too far, so they won't let us. Okay. They won't let us. Wait on, boss. Yeah. They won't let us see that part on the 5 minutes time frame. It's like it's too far from us. Sorry guys, it's too far from us. But you already know what to do. Wait, I'm coming. Time frame PD array. Your sweep has to be happening in the high time frame PD array on the 4 hour time frame. Not every time that the daily candle will sweep. If you see here, not every time the daily candle sweeps. But another way to confirm the daily time frame is every day always mark your previous day high, previous day low. Once price is in a range and price have not finished reacting from that range, there's no need to change. Just leave the candle, the marked range, just leave it like that. And if you see, it's like same thing that happened here. When the market tap into fair value gap, this daily fair value gap, it swept this previous day low, tap into this former resistance point, which is a former high of a daily time frame candle. Then it's rejected back up, then closed. Only that in phase say you see these people they won't go back high. But the market not fit just start to dey go back high from here. Why? Because this candle, the market close above the midpoint of it. If you look this candle, the market close above the midpoint of it. They have to come back down to the buyer side before they can go up. And that's just exactly what the institutionals just did. The banks, the hedge funds, that's how they operate. They move the market back down to the midpoint of the fair value gap again, which is also the discount of this day. You understand? It's also the discount point of this day and also the discount point of the weekly range. As you can see, two discounts. Now let me show you that there's another sweep right there. Let me show you. There's another sweep right there. I ain't lying to you, bro. You can see what I'm talking about. When the market closed higher, the market closed here. This is where the market closed. Market closed where? Okay, closed here. Then the next day opened. Boom. He opened entering where? He opened entering a order block, which is the last sell candle before the aggressive buy up that broke this high. That is the order block. Coming back to the order block, they use the order block very cleanly and very nicely. Let me delete that. You always know clarity is something you want to fuck with while trading. Clarity. Always use clarity when you're trading. Always try to be clear. Like always try to be clear. That will help you a lot. Always try to trade only clear confluences. And if you see, this is another sweep. This is a 4 hour low. On that fair value gap, oh, this is a 4 hour low sweep. 4 hour low sweep. This is 4 hour low sweep and 4 hour high. Market came back to that 4 hour low. Well, first of all, we have seen something there on the midnight when market bounced back. It bounced. You can see that this midpoint of the fair value gap is also a 4 hour order block, which we mark that as a key level. Mark it as a key level. You can see KL. KL, that simply means key level. You understand me? KL simply means key level. You want to always see the sweep happening from such points. That is what I'm trying to explain to you. Places like this 4 hour order block, 4 hour fair value gap, 4 hour breaker block, previous day open and close points, previous day opening gap. Those are high time frame key levels. But gaps are not key levels. Gaps are imbalanced for price to come and rebalance. So anything key level has to be marked with a line. Anything you're marking with a box is no more a key level, is now an imbalance. So all this fair value gap is high time frame imbalance. That price must rebalance before it goes back up. So when the new day opened, price tapped into that this thing and made rejection. See why 2 hour is always important. When you see price tapping from a 4 hour order block, what the 2 hour did? 2 hour made the sweep because 4 hour didn't make the sweep, then 2 hour did it for it. 2 hours made the sweep because 4 hour was acting slow. So 2 hour made the sweep. Let me show you the sweep. This is the sweep on the 2 hour time frame. Also tapping into the key level. Inside that 4 hour key level, that 2 hour sweep occur. On that 2 hour sweep, when you know the overall draw is bullish and the market is now back inside where the market is back inside the discount of the weekly range. That sell that we just caught up there was from where? Was from the premium of the weekly range. It sold back to a discount of the weekly range and also a daily fair value gap. Then it came back up, then it closed. The next day opened, boom, pumped down into the discount point of the next day of the previous day, and also it's still on the discount of the weekly range, tapped into a 4 hour order block, which is also a 2 hour order block when we go down to the 2 hour time frame, and we see the sweep on the 2 hour time frame. That is the more confluences that they are trying to fake out the people waiting for the 4 hour sweep. Boom, and they go up. You know how something about something about something about midnight open is that they are aggressive. Midnight open is always a aggressive time to trade. And if you see this is not Monday, this is same 2026, 10 o'clock candle, 11 o'clock candle, that's midnight. If you go there to that 2 hour sweep, let's go to that 2 hour sweep and let's see. Let's just go to that 2 hour sweep and see. On the 5 minute time frame, you must find a clean CROS and a turtle soup right there. I'm giving you that for free, bro. I swear to God, I'm giving you that one for free, for fucking free. See, this is what a turtle soup, because what is a fake out pattern. It made people believe that they are selling TS. Immediately, what happened? The next candle opened, went back up, closed inside this range, this TS range, and back inside what the 2 hour range too. For the market to close back inside the 2 hour range after acting like what is going low, that is called a TS fake out move. After that TS, and you can see that the last second candle on that TS was the other block. The last set candle on that TS was the other block. But this time it did something really interesting. It made two of my confluences, it made other block and it also made fair value gap. You can see this is the CRS. This is the CRS. This is the CRS as you can see. Inside the CRS, this body of this last candle that formed the CRS is your order block. And as you see there, the other block was just at the point of the fair value gap 2, OB, OB. Sorry guys, this turnaround is making this thing OB. Okay, you can see that's it. That's the OB. That's the 5 minutes OB from the discount of the daily fair value gap, and also the discount of a weekly range, and also the discount of a daily range, and also the bounce from a 4 hour order block, and also the bounce from a 2 hour order block inside those range, and also a 5 minute CROS after the TS on the 2 hour low. 5 minute CROS formed, and what after the 5 minute CROS formed, what formed again? 5 minute CROS formed, and the body of that 5 minute CRS is quite your entry to go long, coupled with a fair value gap too. Two of the confluences are coupled together. This one is what just chase You don't have to chase anything more than 100 pips. This is exactly 100 pips stop loss, and that 100 pips should be like $10 to $12 on 0.01 lot size. Let's see how far that goes. We've already made on that high. We made 1 to 8 risk to reward, right? But see, the market didn't stop there. The market came back, tap into that same entry, and keep going back up. Some people didn't close this trade. They hold it back to the daily fair value gap, the main draw on liquidity. They hold this trade back to the main draw on liquidity, and you see the market is still floating in that direction for days. Market is still floating in that same direction for days. This is how you make it happen. CRS plus ICT. You just need a sweep of a high time frame in line with the daily and the weekly. You need a 4-hour sweep in line with the daily and the weekly direction. Then a 5 minutes confirmation, which is your TS and your CRS. Same logic like a CRT on the 5 minutes. That's just how it is. The CRS confirms that we are ready to go in. Then the last candle that forms the CRS is your order block. And most times it forms creating a fair value gap. Fair value gap is the institutional way of letting you know that there's a high volume on that point of the market. Like there's high volume. Volume means a lot of power, like a lot of pressure. High volume on that place is very good. High volume on that place is very good. That's what the fair value gap means. So this is a 40 minutes video, guys. You can use this anatomy. Mind you, you don't set your target purely on 5 minute structure. When you enter the trade on 5 minute structure, the 2-hour time frame is the best place for you to also set your target. And also the 4-hour time frame too. You already know your weekly drawn liquidity, but on as a day trader, you have to set daily targets. You can see here, right here, the market almost reached the stop, but it didn't reach the stop. That is one thing about putting your stop below the liquidity sweep. That's below the 4-hour liquidity sweep. That's it. Okay, the 2-hour liquidity sweep. And from there, you see what happened, right? Till the market hit that fair value gap, it didn't come back to that entry point. Till it made it to that fair value gap, it didn't come back to the entry point, the daily fair value gap. You can see on the 4-hour time frame. Sorry guys, sorry. This thing is getting too long for me and I'm getting tired. It's getting too long for me and I'm getting tired, sorry. So this is it. That was that trade. 1 to 24 risk to reward. You could have get to 1 to 24 risk to reward, meaning if you risk $10, you'll be sitting on $240 on that trade close. Just $10, you'll be sitting on $240 on that range close. So thank you guys. Thank you for watching. Please, you can share this with anyone who really wants to know about my NFK model. Share it with your guys, share it with your friends. Don't be greedy. Don't make this success alone. Make it with a couple of friends. And always reach back out for support. If you find anything hard on here, always reach back out for support. Take your time on this video. Don't rush. Don't skip it. Every part of it has something interesting and important you need to know about the model. Don't skip it, don't rush it. Just patiently sit down in a quiet spot and listen to what I'm saying and how I'm saying it and what I'm doing and how I'm doing it. Then you can go find a way to refine it to your own best interest and use it to make your own best type of money you need to make. So with that being said, I wish you all good luck, all the NFK traders out there. I wish you all good luck and I wish you all success on trading. I wish you success, and success. We'll see you guys next time. I don't know when is next time, but see you guys. That's all I know. See you guys. Bye.